Good afternoon, everybody. This is Harmeet from Sigma Picks. Thank you for tuning in. We are going to be going over our weekly SPY, QQQ, and IWM Elliot Wave analysis, and let's get going. Okay, so last week we were just a quick review. We were over here, end of this third wave, and third microwave over here, and we were discussing that we wanted to see, we were expecting at least to see some sort of correction slash consolidation happen before the resumption of the trend that we are in, the downtrend that we are in, and lo and behold, we did get a slow down kind of flat correction. Again, it is it is of this expanding flat, and this has been the overall theme for a lot of, like, for example here, uh didn't point this out fully. This is another expanding flat. Okay, so a lot of these, the this is another expanding flat. Okay, so a lot of these corrections that we have had, being in a larger wave set, for example here, okay, or the smaller ones that we have seen or have come to pass, they all have been of flat variety. So, there is no point of, well, there's no point of me going over this again. I think it's pretty much proven the fact that we are seeing a lot of flat corrections, and that has been the theme for this whole corrective area that we've been in. But there's something really big that did happen this week that is something to be very worrisome about. Is the fact, I'm going to point this out right here, the fourth wave, what you are seeing right here. Okay, let me get my tools again. The fourth wave right here, what we are seeing, this explanation mark, it is telling us that this fourth wave has pierced through or is in the zone of the first wave. Okay, so when you have, you go through this, and this is your first wave, and when this, if there is a pierce right here, okay, this exclamation mark comes up. It's just telling us that it's starting to pierce into the range of this first wave. So this is first, second, third, fourth. Okay, so this is a simple way of showing the fact that this has become worrisome. This is also starting to confirm that the larger bull cycle is finally, that it's, we started this bear cycle back in January, and some people say even before that, with the capitulation of all the things that were happening with meme stocks in last year and so forth. Those were the signs that we were starting into the bear market, but we could not really say the bull market was over. We could say we are starting in the bear market. Yes, that is a possibility, but we could not say and confirm that the bull market was over until now. This is the point where we can start really looking at the fact that bull market is in fact over. It is being confirmed, and we are looking at a large, prolonged bear market that could last a year or so more. So what I am going to do for now is just to leave this fourth wave here. Okay, and we want to be mindful of the fact that we do not want it to see go below our 356. Well, it says 356 here. What I want to see is do not go below 350. That's been the recurring theme throughout this whole correction, has been like, if it's okay to pierce it, it's okay. It happens once in a while. On rare occasion, it is shown to happen. But if it continues this to stay beyond, within, so if it continues to stay within the range of first wave, okay, and does not self-correct and start moving and start making some sort of bottoming pattern here, we can say within a few weeks that yeah, go ahead and you can slide everything back. We can slide everything back and say that this is actually now in a larger bear zone, and the fifth wave is way back when the third wave was over. So everything will be condensed back. It is a self-calibrating way of doing things, but we understand that we where we are, the the message from the Fed hasn't changed. There hasn't been anything that tells us that we are out of the woods yet. The wave count is telling us also the fact that we are piercing through the first wave, so that means the larger bull cycle is most likely over, and we're in smack in the middle of the bear market. All of these things are confirming now, and it took a while, but it is confirming now. So I mean, I've always also looked at with you guys the moving averages because it kind of gives the credence to where we are within the cycle. Okay, if it's below a certain, like a lot of money managers also watch the 200 SMA, where for the day chart, DSMA, for the daily chart, where they say, we want to be cautious with being long or having a long only portfolio when the markets are trading below 200-day simple moving average. But that's one thing. We also, what I'm gonna show you guys is, while this fourth wave is finally showing that we are piercing through this first wave, okay, it's finally showing that. I'm gonna bring you out to another chart, the weekly chart, okay. So here we are. So the weekly chart is also confirming that yes, we are entering a larger bear market that could last for a while. Okay, so what you guys are seeing here is a 200-day weekly simple moving average, and we are piercing right through that. At the end of we pierced right through it at the end of Friday's session, and that also coincides with the fact we also pierced through the first wave, okay, pierce through the first wave and are showing a major breakdown. So this gives, it's for all you mathematicians out there. I think this is something that that may hit home. This is in a way of, it's kind of a modified way of proof by induction, where you have your base case that we are in bear market. Hypothesis is that there would be another method that would be able to tell us that yes, we are in a bear market, and your induction step is, of course, it piercing through the first wave of the fourth, okay, the fourth wave piercing through the first wave, and also the weekly candlestick, the weekly candlestick piercing through the weekly 200-day SMA simple moving average. So X can prove something, X plus 1 can prove something, and that just means that X to the whatever plus dot 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 proves the fact that we can say yes, we are where we are, and go from there. So I hope this kind of makes sense. It's kind of it's a little bit more mathematical than a lot of the times that people like to hear, but there is, when you can prove something, or in the process of proving something through multiple methods, through multiple viewpoints that are in confluence of everything happening, you can pretty much say, if this is happening, proven by this, and if the same thing is happening, also shown by a different method, that there is most likely that it is the truth. Okay, so yeah, build your truth tables. All right, so let's go back. Let's just keep watching this. I don't know how far down will go. This is a high momentum move. Just to keep looking at it, this is a high momentum move with volume, and that is also very troublesome. It has broken down quite a bit. It is forming starting to look like forming another impulsive wave down. It did go through our flat consolidation, so I will be watching this. I did take my I did go flat over the weekend, and I just wanted to, have this. I wanted to see how the markets will react to specifically going below this, especially when the volume came in. I want to see if we do get some sort of bounce and gives me another opportunity to short, or if we just have some sort of gap and go come tonight and in the futures that we can also kind of capture come in the morning with when it does if we get a bounce in the morning the cash session that we can capture some gains going short depending on what the markets gives us. But for now, let's just watch this. I am extremely concerned about this. We do not want to see it break below 350 if possible, and that kind of opens up the door towards 300 and even lower. So we just another one thing that I want to point out that when we do have these corrective waves or the correction in larger bull market come in, you do see markets take a 50% haircut. Okay, when we were at 420, 480, for let's just say 480, half of that is 240. Okay, that's where we can say the 50% markets lost 50%. So, and that is quite a ways away. So be mindful of that too. Also, that when these corrections do take place, the bigger corrections that do take place within the markets, sometimes they do trace back 50%. Okay. All right. Let's go going to QQQ. So QQQ is a little bit more developed. It is showing a little. Again, we are seeing what we'll just point this out again. We are seeing flat corrections everywhere. Okay, flat corrections are everywhere. Like this has, if the markets, all markets are showing you this, know that most likely than not, next one is going to be a flat correction. If there is a change in characteristic, we really have to pay attention to that. If, say, the correction all of a sudden is not a flat correction, it's more of a zigzag correction, or if it's a more of a, it's something more in line of a combination or more complex. The more complex these corrections become, it gives you a sign of the markets can't make up their mind and there are some mixed feelings coming in. I see that happening only when the Fed slows down their interest rate hikes. That's the one thing. Unless other than some sort of other geopolitical event that happens that actually gets us even going, even with the higher momentum going to the downside. The only thing that is really affecting the fact that the markets are behaving the way they are and that would get them out is when Fed stop hiking the rates as fast as they are, slow down. So instead of 75 basis point, they go down to 50 basis point or less, or that there is some geopolitical event that gets them going faster, but not that. And also we see the dollar is losing strength within the global market, and that kind of gives you the signs of easing inflation in other economies that are not betting or pegging their currencies against the dollar itself. I hope that makes sense. So I digress. As I think there are a lot of people that have a lot more experience than I do in macroeconomics and will be able to talk about these kind of scenarios in a much better and highly communicative, intelligent way. So what I want to look at this week, I think this is the zone that I'm more interested in. Well, let's just see how Monday goes. So let's just see how tomorrow goes. This is the zone I'm interested in. 266, 262 is the zone that I'm really interested in. I want to see it kind of slow down. And if we cannot cannot take out the fact that the 250 may be in the books right now when it comes to QQQs. That is going to most likely get hit. We will know as tomorrow starts that if that probability is actually increasing, or this possibility has the probability of this possibility is actually increasing. The fact that with the momentum move we saw, with the high volume that came in, that we are continue to see this move make your stereotypical five wave structure going down all the way to 250. And that's something that I want to take full advantage of come next week or the week after as we go. If we are moving below 266, I we will start looking at this too. um, Let me, so this is 5 versus 1. So I have not, obviously, let's go back. So I have not mapped out this fifth wave yet that we're in. Okay, I will be doing that tomorrow on the fly. I will be looking at that. I will be looking at the fibs. I will be looking at all those things that tells me, yeah, we are in the money wave. Right now, what it is showing me is that it has this, okay, ending wave diagonal structure that is forming. It's not truly an impulsive, with third wave extended, but it may be an ending wave diagonal that's forming because of this A, B, C, end of first wave, okay? And then this is your first wave, and this is your second wave, and now we should see A, some sort of B, and if that confirms, I want to take advantage of the C wave into the third wave that we will be going into. Okay, so that would be your money wave. Remember, it is on a shortened time frame, so these moves will happen a lot faster. You just have to be watching the markets and be ready for it. If you are not somebody who can watch the markets on the fly, or are somebody who has a day job, this is something that you want to just wait for an entry on the pull up. If you are short bias still, who knows, maybe you might be long. Before you look for this down wave down. I mean, a lot of people, if you want to sit through this, you just know where your risk is. Okay, just know where your risk is. Just understand how you want to play it, and if you're playing options or not, and that could be a substantial loss or drawback within your, what you are risking. So whatever you and however you do what you do, just be mindful of the fact that this structure is not fully complete, that we are in a fifth wave. We don't know if it's an impulsive fifth wave in the sense that where a third wave is extended, or if it's an ending diagonal fifth wave. That we will find out next week, and that would give us more, at least for me, that would tell me how I will be going and trading QQQs into the coming week. I always want to let data come in. That is my highest priority. I don't want to rush into things. I know my bias is short right now, so I am looking for short trades when the market actually is giving me a low risk entry into the short where I can maximize my profits. Okay, so those are the ideas that I want to follow. Again, so let's not beat around the house. Let's get going. 250 is where I am looking for the market to get to before we have any sort of meaningful bounce, but anything can happen at any point in these markets. So now let's go to QQQ. Where are we? So QQQs are okay. So we are reaching a symmetry point. Okay, at 162.78, we are at 38.2% retracement of a larger, this is the second wave that is pointing to, of the larger wave count. Okay, so even though IWM looks horrible and it is what it is, it may be in a better place than a lot of the other markets. Um, but that being said, we lose this 163, we lose this 162, that we're not looking at 150 or 50% retracement of the first wave, okay? And that's the larger cycle. And again, that we talked about this whenever markets go through this, just about 5 minutes ago or 10 minutes ago when we were looking at SPY, that it's normal for markets to get a 50% haircut when there is a larger bear cycle in play, and that's what we're at. So expect, I am hopeful that I hold this, but I am also understand the probability of the possibility is extremely low, and the probabilities of it going to 50% retracement are much greater right now as we speak, as where the markets are. Next month, I think whenever the next date is, when the Fed comes in, all of this data is going to be coming in. If the inflation data comes in cold, we're going to see a heck of a bounce, because that will take away the possibilities of, markets, the Fed hiking the rates at a higher pace than the other. Again, I think I mentioned it multiple times now. That may change the dot plot. So all these things are happening within the fact that narratives, the cycle, and everything has to go in the opposite direction for the markets to get back on track, or at least on a bullish track. What what we are, where how we trade, well, how would I trade IWM is, we are in a no man's land right now. Okay, it's like, if you go back, you will see that a lot of times that IWM, again, is a creature of its habit, has goes through these Darvis consolidation. Go back and look at it. Okay, goes through these larger Darvis complex consolidations before breaking down. It has been happening for over a year now. That is gonna continue to happen. It is the structure of this specific breakdown in IWM, where they go through this Darvis breakdown, where in other ones, in QQQs and SPY, we see more of a flat consolidation slash correction of a larger trend. Where in IWM, again, we're seeing these more of a Darvis type corrections, where the markets kind of goes into this Darvis correction, longer protruded Darvis correction. So that makes trading that much easier. So, if this is high, we can look for Wyckoff, and analytically speaking, Wyckoff, using Wyckoff analysis, that it may break down as long as the market is bearish. Okay, if it breaks below this 162 level, you are looking for pullback, and then looking for your entry. At least I am looking for my entry on the pullback for the resumption of the trend. I love pullbacks. I think they are where swing traders make their money, on the pullbacks, how to enter on a pullback before the resumption of a trend, before looking at a larger wave count. Is it in the third wave? Is it in the fifth wave? Like, understanding where we are with everything else. Okay, boy, what a long, protruded, long session we've had. So I hope you guys have an awesome, awesome, awesome trading week. I hope that this helps, and I hope that you guys are do well, and just stay patient. If there is no clear sign of something that's telling you, what the markets are, and if you are getting what the markets may do, and if you are getting the setup that you want, it is cash is king, and you may go ahead, might as well hold your money, because there's no point of losing it, no point of going in and out. Just be aware of how you trade and what you do for yourself before making, jumping into a conclusion. Of course, there are a lot more aggressive traders that would go the other way. Anyway, I digress from that subject. So have a great weekend, guys, and we'll see you next week. Bye bye. Thanks for watching.